the conflict that may occur into 2027, by the way, is Taiwan, China, America. Well, that's many noughts bigger than anything we're seeing now. And, that is the problem. That's the point we have to get past, the 100 years of communist rule in China and getting Taiwan back. So that is what drives gold to $8,000 to $10,000 an ounce.
And actually, central banks for 3.5 years now, they're on pace for their fourth year now, 1,000 metric ton purchases.
Wow.
Absolutely dwarfing what we've seen back to like the 60s in terms of central bank purchases, outperforming previous years by like 40 to 60% on any given year.
Clemchambers and Richcheckan warned that the next major geopolitical flashpoint, a potential U.S. China conflict over Taiwan by 2027, could become the single most significant catalyst for gold's next parabolic move. As they explained, such an event would dwarf today's market tensions, reshaping global trade, defense spending, and monetary priorities. This geopolitical risk, combined with central banks' relentless gold accumulation, averaging nearly 1,000 metric tons annually for 4 consecutive years, paints a powerful picture of preparation, not coincidence. For the first time since the 1960s, central banks are buying gold at a pace that far exceeds historic norms, signaling a structural shift away from paper reserves toward hard assets. These moves aren't about speculation. They're about survival in a new, unstable world order. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
We're looking at a conflict which is China versus the West. All these conflicts you talk about, however sad and distressing they are, it's just the detail. It's a tiny issue. If you look at the World War II, they rolled over backwards and forwards over Ukraine a few times, and it doesn't even get a chapter. Conflict that may occur into 2027, by the way, is Taiwan, China, America. Well, that's many noughts bigger than anything we're seeing now. And, that is the problem. That's the point we have to get past, the 100 years of communist rule in China and getting Taiwan back. That's what needs to be avoided. And that is the wicked thing that can and might drive gold to 8,000 or 9,000. And, that's what everybody in the West is panicked about, because right now they can't fight a war. You can't fight China because it makes all your stuff. China doesn't have to do anything. It just has to say you can't have that anymore. No. Oh, motors for your drones. Yeah, we make all them. Yeah, no, we don't want to send you any of those. Rare earth. Oh yeah, you've got a mine now, have you? When do you finish it? Oh, in 3 years' time. Okay. No, you can't have any rare earth. No. Oh, you can't build missiles to fight us with. Oh, what a pity. But ships, yeah, you don't have many of them, do you? You find it difficult to make them, don't you? Yeah. Yeah, you put that tax on our ships so that you could have a shipbuilding industry. So we put them back on you, and you still don't have a ship industry. So how are you gonna supply yourself? Oh, you can't. Oh, what a pity. What a pity. What a shame. You've been trying to reindustrialize, haven't you? Yeah, how's that worked out for you? Yeah, not very good. No. Because you can't build factories in Europe. No, they won't let you. No, they won't. No. And you have to ask them for money and they won't give it to you for 2 years. And no. Yeah. So that is what drives gold to $8,000 to $10,000 an ounce. And guess who's buying it? Who's buying all the gold then? Oh, it's China. Oh, funny that. Oh, I wonder why. Yeah. So unfortunately, why people think that governments are going to make silver and gold coins again, and that's going to be their currency, however catastrophic that would be, yeah, it's about the international currency of war. And, if China needs to buy some tungsten from Portugal or wherever it wants to buy it from, I don't think they're going to take the yuan. They're going to, and, Russia, for example, if they want to buy stuff off Russia, I think they're going to have to pay in gold, yeah? And it's pretty grim. As we all know, when something goes up, it keeps going up forever, doesn't it? I mean, it never stops. I mean, it just goes up to infinity. I mean, just like Bitcoin, So yes, I mean, joking aside, you are dealing with a repricing event. Okay. So gold repriced. So there, it's doing that. And this is technical analysis. I've got a YouTube channel where I talk about this. So you've got a price. Let's call it $3,000 an ounce. Okay. Or 2,000 an ounce. It's doing that. That is the uncertainty of the market. Is it too much? Is it too little? Do I want to buy some? Do I want to sell some? There, it does that. Then something happens. I don't know. And when it reprices, it just does that. It should do it instantaneously, but the market doesn't reprice instantaneously because signal to noise takes time to permeate, blah, 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 blah. It goes like that. and then it reprices. It has its repricing, and that's where it goes. And then it does that. But that's what you're seeing. It repriced, and 4,000 is the level of repricing, and now it's going to do that. I mean, it might be decided because there's little bit too much FOMO. It'll go back to 39 or whatever, but it will do that. Yeah. And then the next thing that comes along will reprice it, and it'll either go thunk, which is unlikely unless suddenly Mr. Trump gets to Jesus or Zai gets to whatever Buddha. Yeah, it will go, it will reprice again. It will just go vertical. It will break out of a range, and the repricing range is where we are now. So as an investor or a speculator, something reprices, you watch it. And when it starts to reprice again in any direction, you jump on it. I.e., if you're going down, you jump on it short. If it goes up, you jump on it long. Yeah. And we are at that halfway or the whole way, and that's really the only call that you want to make, or actually you shouldn't bother making that call. It's repriced. It's going to stay there till the chicken goes bah, bah, and lays another egg, and at that point it will probably, and I believe with gold it's highly likely to just break up and head off towards 5, 6, 7,000, which will be bad because it will have to be a very bad reason to do that. But if it does it, it does it. It don't listen to me. I listen to it. So we are at that repricing level, and there's going to be an area of volatility while it's doing that, and it might be somewhere between like 4.1 and 4.8 or whatever. It's going to be doing that. And then actually what tends to happen, a really fine gradient level, it will go, and then it will go bang or bang. So that uncertainty will fade away because everybody's sat there going, what's it going to do? What's it going to do? Oh. And that uncertainty will diminish, and that range will shrink. Yeah. And that will tell you that something wicked this way comes, either one way or the other, and then it will break. It will either break up or break down. So that is what's going to happen probably over the next few weeks or maybe even months. But of course, it's not just some sort of pre-planned movie. It depends on the players, and it depends on what the players do. And, if suddenly Putin gets out the wrong side of the bread and presses the wrong button, it will just go, it could go tomorrow. So it's not like it's going to go on January the 3rd, and I've drawn some lines that tells you. But you can see as the uncertainty shrinks that the next move is on the way.
Clemchambers explained that the potential geopolitical clash between China, Taiwan, and the U.S., likely around 2027, could be the single most significant event driving gold toward $8,000 or even $10,000 an ounce. He noted that the West's industrial dependence on China leaves it strategically vulnerable, as China could withhold key materials like rare earths, drones, or ship components, crippling Western production without firing a shot. Gold's repricing, he added, is already underway. Not speculation, but adjustment. The metal has broken out to a new range near $4,000, awaiting the next catalyst. When that next egg hatches, as he put it, the market will decide, and it could be a sharp revaluation higher. Let's get into the interview.
And actually, central banks for 3.5 years now, they're on pace for their 4th year now of 1,000 metric ton purchases.
Wow.
Absolutely dwarfing what we've seen back to like the 60s in terms of central bank purchases, outperforming previous years by like 40 to 60% on any given year. So incredible demand out of central banks that's not stopping. And a big reason is they have the same concerns that we do as investors, as consumers in an economy. They're worried about the purchasing power of their fiat. So whether that be euro or yen or dollars or what have you, all of these central banks have become addicted to debt. And as a result, the purchasing power of their fiat currency is going down. They see that trend. So why hold a reserve asset like a dollar or a euro that's continually weakening when they can hold a tier 1 asset, gold, that's actually increasing not increasing, I guess, holding its purchasing power as the other fiat we measure it with has fallen. We're concerned a little bit about the U.S. And the U.S. dollar, the world's reserve currency. There's nothing on the horizon to replace that anytime soon. Make no mistake, but it is being mismanaged. We do have a dysfunctional government that's out of work. They kind of locked themselves out for 30 days or 20 days now, working on probably the longest shutdown we've seen here in the U.S. That's not going to change. So, they had a lot of money in U.S. treasuries. They had a lot of money in euro, and neither one of those currencies are being managed very well. So why not replace it with a tier 1 asset like gold? And then the last thought is just the de-dollarization, the concerns over the weaponization of the dollar. If you absolutely love sovereign coins like Maples and Eagles, get into that first because the premiums are already starting to rise there.
Okay.
In terms of the best deal, there's no question for physical which is where I think you start. You have it delivered to your doorstep. The best deal is right now junk silver. We're still doing offers where I'm able to sell it and make a small profit. And my retail customers are paying less than spot silver.
Wow.
Okay, so buying it below silver still, by far, that's your best bet for physical right now. For gold, I think you can still go with sovereign coins, but the eagle and the maple are starting to move away a little bit in terms of premium. You're probably better off with maybe a Philharmonic or a kangaroo from Australia, something along those lines. 1 ounce bars aren't a bad option too, for gold products right now if you're looking to take delivery again. For many years, you kind of look at the dollar and gold as kind of opposite ends of the balance scale. Right? So if the dollar's up, gold's down, and vice versa. And that was largely due to confidence in one versus the other. If everybody had faith in the strong dollar, why would I need to own gold? It was kind of the thinking. And if everybody is worried or fearful about the paper currency, then absolutely it's a rush to a safe haven of gold. I still see that playing out for the reasons we just talked about: the de-dollarization, the hedge against inflation, concerns about weaponization, et cetera. So people are moving to that safe haven for gold. The more the currency is mismanaged, the more people will move to gold. We talked about this, I think, last time. Dollars were the U.S. Treasuries were the number one central bank reserve asset. Number two was euro. Number three was something else. And then this year, number two was gold. It replaced the euro. And now gold has replaced U.S. Treasuries as well. The case is getting stronger for gold as the dollar's under pressure. No two ways.
Checkan closed by pointing out that central banks are acting just like any rational investor would. They're diversifying out of failing fiat and into real money. With gold purchases exceeding 1,000 metric tons annually for nearly 4 consecutive years, the global monetary system is quietly shifting its foundation. Governments, riddled with debt and dysfunction, are eroding confidence in their own currencies, forcing both individuals and institutions toward tangible stores of value. Gold has officially surpassed the euro and even U.S. Treasuries as the second largest reserve asset, signaling that the world's confidence in paper promises is waning fast. This isn't just an inflation hedge anymore. It's a reallocation of global trust. The trend is undeniable and it's only accelerating. Don't forget to like, share, and subscribe for more expert insights on gold and sound money.